Welcome to yet another issue of the Grey Market Talk on the Tactical Brief between Thorsten Wegener, a retired market maker from the equity side. We'll talk about equities later. And my friend Nic former market maker for the bond side, bond proprietary trader, chief investment officer, golfing god, and as he is in Berlin at the moment, I hope they finally called you in to fix the mess, Nic. Is that right?
Well, it is a mess, isn't it?
So no phone call from Mr. Habeck. Oh, Mr. Themistocles, could you please come in and sort it out for us? I think we are in a big mess. We've made a big pickle. Give us some advice.
I think all you need is a big broom just to sweep some of these people away.
It's amazing, huh? Obviously, I have the first part on it. Let me just bring up actually the shared screen, and we can dive right into it. Grey Market Talk, 26th of November. Thoughts from abroad. Elections past and future. Now, I have two beautiful pictures. I even went into the English websites to have the titles, and I gave it the title, Where Did All the Money Go? How Germany's debt brake broke the budget, and Germany moves to suspend debt brake for 2023 to fix budget turmoil. So what happened? Germany found itself after the institutional court ruled something illegal. They wanted to take the 100 billion they took as a special debt or special piggy bank for the corona pandemic. They only spent 40 billion of it, and then they thought, oh, we have 60 billion left we could just blow away. Let's put that into other stuff. Our green projects and everything we always wanted to do, but we never had the money. And then the Constitutional Court said, no, boys, that is illegal, actually, and you should have known that. So I was now expecting, actually, the German prosecution services to arrest a lot of people, because that's usually the threshold. If you know you've done something illegal and you did it anyway, then you should be arrested. We do it with everything else, but we apparently don't do it with our politicians, interesting enough. So no prosecutor seems to have the guts, actually, to make this call. However, so the 60 billion are missing, and Germany now has a problem. They actually do not have the money to spend, which is quite interesting, because now they have to come up with a solution. And the solution is, as one could imagine, always the same. Ooh, yes, this 100 billion we had, and we blew only 40 on the corona pandemic and thought we could use the 60 for our projects. We could only have that at the time because we declared a crisis. And the Constitutional Court said, yeah, fine, if you have a crisis, you can go over budget. That's all right. So now they're thinking about what could be the next crisis we could declare for 23. So I'm actually quite interested what they will come up with, because if not, they have to put it in the normal budget. And in the normal budget, we have a so-called Schuldenbremse, which means you can't spend as much as you like. So they can't really get that through. They will only get away with it if they come up with a new crisis. Nic, what's your guess? What could be the new crisis we declare in Germany to get our greedy little politician hands on that pot of gold?
I think they already are in a crisis. So they can just simply say that we are in a crisis and we've been in a crisis.
Yeah, but that doesn't count. You can't say we are inept, stupid, and can't fix it. Therefore, the crisis is our politicians. They have to come up with a made-up reason, like climate change or you name it.
Well, whatever, I think you're pretty certain that they will find a way. Okay? I mean, that seems to me, we have to just assume that. And the bigger point is not really whether the Constitutional Court allowed it or didn't allow it. I mean, let's just say they allowed it. The bottom line is, this government wants to spend money. Okay, and why do they want to spend money? I mean, it's what we've talked about for a long time. Growth is just struggling, and they need to get some money into the system. And they're doing exactly the same as the Americans. They're looking over at America and they're saying, well, look, the Americans are actually growing their way out of a problem, they say. So we've got to do the same. So we need to spend some money. And actually, that's the reality. Growth is a very political thing. If you're a politician and if your alternatives are no growth and don't spend money, or growth and spend money, you know which way they're going to do it. And then ask me, more importantly, well, how do the central banks see all something like this? Well, in theory, the central banks are supposed to say, well, actually, we have to dampen down on this thing. No way. Do you honestly believe that the government will allow the central bank to dampen growth or to try and dampen growth when they're doing their utmost, breaking all the rules, doing whatever they can to actually create that growth. So, it comes down to what my belief is for a long time is that these central bankers will eventually have to work for the governments.
Yeah, well, the lady in charge, Miss Lagarde, has great experience in pissing money away in her last job when she was head of the IMF to 44 billion to Argentina, to the former Peronist regime or whatever you want to call it. So yeah, I'm with you on that side. Most likely going to happen. There are evil tongues in Germany in the, let's call it the free press, who actually, they counted the days until you are entitled for your minister's pension. And they say, all the guys in charge now, they have to stick it out till the 6th or the 8th of December. I forget which day it was. But from that day on, if you have been a minister in the parliament, then you have your full pension entitlements. And that's the day we should be looking for. If the liberals, the German liberals, the FDP, might pull the plug because they can't take the agony anymore. So it's an interesting point. I don't see that happen. Yeah, they want to sit out the next 2 years. That gives them more benefits. But yeah, I'm with you. They will come up with something. And if you look at the United States, the whole growth in the economy is actually the state spending money. That's it.
Absolutely, and as it will be in Europe, and it's not just Germany; it's other countries. And although we criticize the politicians, I mean, be in their shoes. What other choice do you have? Yeah, I mean, this is probably the most realistic outcome is to continue to invest in the future. But the sensible thing that politicians need to do, and this comes back to the talk we had where we mentioned this Cambridgeshire council spending a lot of money on one child with special needs. The governments need to use their money wisely. They need to spend the money where it's actually going to have an impact, and they need to stop wasting money in areas which actually just are all about building bigger and bigger governments. And I think if they were to focus on something like this, the world would see it or investors at least would see, all of this debt in a totally different way, because then they'd see an end to this thing. But at the moment, there is no end to it. And then you're a holder of fiat money. You're a holder of, either euros or dollars or sterling, and every single government is doing exactly the same thing. Just wasting your money and wasting the purchasing power of your money, and you've got no other choice. And up until Bitcoin, gold, and all of these things, and I think more and more, things will go down that path. I mean, it has to.
I came across a very interesting tweet the other day. Unfortunately, I don't have it on the slide. It was a McDonald's employee, and they have a so-called McDollar. The McDollar can be given out to customers who are not happy, and it buys them a Big Mac. So he was posting the question, very interestingly, has that more worth now than a US dollar or euro or any fiat money, because it's actually covered by a Big Mac?
Yeah, I mean, that's interesting, because we measure all of this thing. We measure the dollar to the euro to the sterling to the Chinese currency to the Japanese currency. But if you look at what all of these economies are doing, they are all in the same boats. They all have to try and stimulate their economy, and they've all sort of spent an awful lot of money in areas which actually haven't hit the spot. Yeah, I mean, it's just been about building bigger and bigger governments and wasting this money, and that has to end.
Yeah. So, and we're through the first possible election in Germany coming up. Not very likely, but yeah, it's an alternative. Which brings us to the second election I want to post. Maybe the introduction to that. In the European Union, there used to be 3 fiscal hawks in the past. Germany, done and dusted. Austria, also, I've heard, I'm not too much into Austrian politics, but they're also more on the spending streak now. And the last country on the fiscal conservative side has now had an election. Our friends in the Netherlands. And Geert Wilders, victory in Netherlands, election spooks Europe. BBC headline here. Yeah? And I thought it was very interesting. Let's look into his European policies, what he suggests there. European Union, that is, by the way, from ChatGPT. I simply asked them, give me the policies relating the European Union from Geert Wilders, who just won the election. So Wilders and the PVV have been Eurosceptics and critical of the European Union. Their policies include advocating for the Netherlands to leave the European Union, the so-called Nexit, and regain control over national sovereignty, calling for a referendum in EU membership and treaties, seeking to give Dutch citizens a say in EU-related decisions, opposing the euro currency and advocating for a return to the Dutch guilders. And on the economy and welfare side, lower taxes, particularly for middle-income earners, reduction of bureaucracy and government spending, protection of the welfare state for Dutch citizens. Nic, if you're a European Union official and you run the show, what do you say to this guy?
Well, which part of the European Union official? Is that the ECB part, or is it the European Commission part? Because, actually, every economy, what you see today in Europe, is actually doing things for themselves. What's good for Germany, the Germans are doing. What's good for Italy, the Italians are doing. And when you think about that, you've got this central bank, which is supposed to kind of control all of this stuff, but there is no control about it. It's the European Central Bank is facilitating. It has to facilitate. It's forget this everyone, talks about, oh, they've got an inflation mandate. Forget all, and that's nonsense. When you've got politicians actually looking at breaking up the euro, the role of the central bank is to facilitate. So all of these countries are actually working themselves for themselves. And so some of the criticism that he's got here must be steered towards the European Commission, that they are perhaps interfering in policies which prevent Holland from behaving the way that Holland wants to behave. But their financial side, I think they're actually getting the independence that they need, because they all do their own thing anyway these days.
And as I see it, he won the election. I'm pretty sure he will not run the next government, not even as a junior partner. I think they will all gang up on him, because it's too dangerous for establishment that this guy could actually put a vote out that the Dutch citizens on the street could vote Brexit style. It's this big unknown you can't afford to have twice in a row. I remember quite well when David Cameron head in hand is the English expression, right? Came to see Mrs. Merkel and said, we have this big vote coming up, and Mrs. Merkel, could I please have a provision that I'm not paying out the same unemployment benefits to European citizens in the United Kingdom when it's far higher in the United Kingdom than in their own countries? And Mrs. Merkel told him to F off. Yeah, and the result was that the European Union has one less member in there. So they can't risk it again, can they?
That's right. Actually, I don't think she used those terms, but I actually think what she did say was, or Cameron said, look, otherwise we're going to have to put it to a vote. And then she asks him, well, do you think you're going to win the votes if you put it to a vote? And he said, oh, yeah, sure, we won't exit the euro. And she said, well, then I don't really need to give you anything, do I? So now you can't you can't actually sort of put this thing to the test again without understanding that the European Union is at risk. And therefore, I think this is just a card.
It's actually interesting. Merkel did exactly that after Cameron left and the vote was lost. She introduced the policy Cameron wanted to have in Germany.
Yeah, well, that's what I was just about to say, that knowing he's got this thing on the agenda pre the vote, it's not going to come to that, because what he will get is he will use it as bargaining chip, and he will get what he can for the Dutch to be much more independent on some of these European policies. I mean, these guys have the people have been screaming, the farmers have been screaming about some of the European policies which have been closing the farms in Holland, and perhaps this is his edge to say, well, look, if you give us that, then we won't go for a vote. And the other thing I just have to quickly say, we haven't talked about Argentina yet, but
it's coming, Nic. It's coming.
Okay, but I won't do a spoiler alert. But I do want to say that one of the things that Javier Milei said after he was elected was that he's caused some question mark whether he's going to go through with all of the promises that he made whilst he was, campaigning. And I think he was asked in an interview, well, hang on a minute, you said you're going to do a lot of things. And his response was, yeah, but when you're in government, you have to be a bit more responsible. And so I think what Geert Wilders is saying in his campaigning and what he does when he's actually a member of Parliament, we'll see whether or not the two things are 100% overlapping. I don't think they will be.
Well, there are outrageous policies in his program. Obviously, lower taxes, particularly for the middle income earners, outrageous. How can you ask that in the European Union? Reduction of bureaucracy and government spending. How dare you to pull a Greta Thunberg? That can't be. And protection of the welfare state for Dutch citizens. Get out! Yeah. Oh my God! What are you trying to achieve here? You're ruining everything. In Germany, we're talking about introducing new taxes again. If we can't find this magic hole where we can still put the money in, Germany has the highest tax income we ever had, ever. Yeah? So we don't have an income problem. We have a spending problem. They still want to piss it away, and it's quite marvelous. So yeah, I don't see him running a government soon. They're going to procrastinate it till it gets far worse, what we see, and then we all end up with people we did not want to have in power. Anyway, you already mentioned him, the man of the hour, I called him, and Javier Milei. I like this meme that went around. It's a quote of his: "If printing money would end poverty, printing diplomas would end stupidity." I think, especially looking at the UK, because I lived there quite a while, you're trying to do both, Nic, aren't you?
Yeah, that's really, it's a good meme, and it's, there are many a true word spoken in jest here. But the reality is, we are not in a perfect state today. And so, how do you fix an imperfect state today? And in my view, you can't have a central bank working in the opposite direction to where your government is trying to work. And although you can say, well, look, that's what we had in Argentina, and that's why they are in the mess they are, because they didn't have an independent central bank. But I think the European, the UK and the US have to somehow engage the central bank and find a mechanism whereby these people can cushion the blow for long enough that the debt burden has a chance to really come down. At the same time, the governments must refocus some of this spending, so that, as you say, it's a spending problem, and sensibly cutting things which are just waste, which are just government, bureaucracy. Many things can be cut. You can fix the debt burden not necessarily by raising taxes, but by cutting stupid spending. And I think that's ultimately, it's a mixture of a number of things that need to happen to get us through this mess. And it really is a mess. Yeah. I mean, look what happened to Argentina when the central bank facilitated the government. And I think that's the big fear. I don't see no other way.
I have another slide where I asked ChatGPT again on some of President Milei's policies. That was actually quite interesting. One more point I want to make, because we were talking about Argentina a while back already and said, if one of the countries actually has political change, you should look at the countries with the least foreign debt. And Argentina actually qualifies for that, yeah, simply because they don't get any other money besides from Mrs. Lagarde's former job as IMF head, who pissed 44 billion in that direction. So otherwise, they have pretty much a clean sheet. But I found very interesting overview of President Milei's policies from ChatGPT: free market and deregulation. Milei advocates for a free market economy with minimal government intervention. That's where he wants to bring his chainsaw to, right? He promotes reducing regulations on business industries, aiming to foster competition and economic growth. Actually, a sensible libertarian policy, right?
Tick.
Yep.
Right. I can't argue with that.
Tax reform. He has proposed significant tax cuts and simplification of the tax system to stimulate investments and encourage entrepreneurship.
Tick. The simplification of the tax system. Many weeks ago, I was speaking in jest when we were talking about we don't have enough workers in Germany. And I said, well, that's nonsense. You just take the tax system, put tax at 25% for everybody, and get rid of all of, 500,000 or whatever it is of tax bods, whether they're advisors or whether they're government people. And there you've got 500,000 people. Simplification of the tax system is a good thing and necessary.
By the way, do you know where 60% of all global tax laws are being made? Take a good guess.
A 60%. Good guess. We say of global tax laws.
Yeah. So all nations in the world who write tax laws, 60% of these tax laws are being made, drumroll, Germany. So we fill all the paper to drive people insane. Yeah. So tick on that. Monetary policy. Your piece. Milei has criticized central banking policies and advocated for changes in the monetary system to ensure stability, often suggesting alternatives to the current fiat currency system. That's a big one, actually. We're talking about dollarization here, obviously. Yeah. And I looked into, there are a couple of countries who use the dollar, but how do you actually dollarize an economy, Nic, without it completely blowing apart?
How do you dollarize it? Well, already, as I understand it, Argentina has not the country, but the populace. They've been using dollars for many years. I mean, for a currency that they've lost confidence in the currency many years ago. And because of that, everybody sensible or everybody who can has already been transacting in dollars. And I understand from the work of Steve Hanke, who's the expert on this, and I think he's been somehow advising the Milei people for some time on the dollarization issue. He says that Argentina has the largest stock of dollars outside the USA. So it's something like $250 billion worth of dollars. Now, the country doesn't have 200. So in other words, the sovereigns, if the sovereign had something like $50 or $60 billion, it could sort of convert its own debt at the moment from pesos to dollars. I don't think it has enough. But I think the point being that at some stage, in order to do this, they need to change the constitution. Milei has to get support from the senators in Argentina. So it's not a done deal that he can actually just do it himself. He needs support of the rest of the the government or the existing government there. And if let's just say he does do this thing, as you say, it's not the first time that any country has adopted something like this. And whenever a country has adopted it, that's generally gone very well. There's been some European-based, Moldova, I think, has done this thing. El Salvador has done this thing. Ecuador, I think, has gone down this path, and it's all worked reasonably well. And what is this all from? You talked about the debts, the external debt of something like 80% of GDP. We say, well, that's very low. Well, why is it 80% of GDP? Because they actually they don't borrow money per se. They don't borrow sort of foreign debt. They just print money, and then they issue T-bills, and then they force some sort of bank or whatever it is to buy this stuff, and they just continue to print and print and print. The real debt situation is substantially more, because the way that they finance themselves is just through printing of these sort of short-dated T-bills. And in order for this thing to work, the government themselves have got to stop all of this wasted spending. In other words, this big government. So point number one, they have to minimize the size of government to stop this wasted spending. But that will be a shock to the system, because all of the people that are employed in this area, you're going to have to say to them, well, you're going to have to do something different. And that means there's going to be a period of hardship for a number of people until it can turn itself around. But, at the end of the day, the current system is not working. So I think what he's saying, and I think what Professor Hanke is saying, you have to try something else. And the thing to try is something where there is discipline, and that means adopting the discipline of the US government. Personally, that's out of the frying pan into the fryer when you go out of the peso and into the dollar, but that's a long way down the road. The problems for the dollar is a long way down the road, but right now it's probably the more sensible solution to Argentines' problems than anything else.
That fits well into point 4, social welfare and state intervention. He opposes excessive government spending and welfare programs, arguing that they lead to inefficiencies and hinder economic development. That is actually quite interesting. If we look at Argentina, Argentina at the moment, there seem to be three classes of people. The ones who don't have anything, so they don't have any peso savings. Then the ones who used to be the middle class, allegedly they are saving everything in US dollars anyway. Yep. And there's the kleptocracy, who's also saving everything. They don't trust their own currency. So if you would come with a hard cut, it would actually not affect a diligently saving middle class in pesos. It would actually say, yeah, fine, let's get rid of all that useless paper and start with a clean sheet. So actually not too bad a starting condition. Then advocacy for individual liberties. Yeah, Milei is known for his emphasis on individual freedoms, both economically and socially, advocating for personal choice and limited government intrusion into personal affairs. And then criticism of established economics. He has been critical of traditional economics policies in Argentina, advocating for radical changes in address. That's what we're talking about, blah, blah, blah. One point is not on here, which I found very interesting and which gets a lot of criticism. Actually, 2 points. You're a Brit. He wants to have the Falklands back, Nick. What's your opinion on that?
I stay out of politics.
Good. Second point. I forgot it. The Falkland line was so nice. I had to slip it in here. Oh, yeah. Actually, he said, we will have open borders. And all the conservatives were like, oh, no, you can't have that. Yeah, well, because he's a libertarian. He said, we'll have open borders and no welfare state. So everybody who wants to come and bring his work, intelligence, and good diligence into Argentina is very much welcome. That will help the economy. And I thought, finally, a libertarian I can agree with to say, yeah, fine, let's get rid of the borders, but also let's get rid of the welfare state. This will lead to an American-style 200 years ago economy where people, give me your tired, give me your poor, who come over and say, yeah, there's a country which has huge resources, a reasonable, good educational system over there where you could really pull that off, that stuff. So a real libertarian, in my opinion. Would you agree? Do you disagree?
Yeah, I think that's a I don't know whether when he's talking about getting rid of the welfare state for his own people, or whether he is stopping access for those people who are coming from overseas. But I think that is a policy that every man today would say that makes a great deal of sense. And that would mean that the immigration that you see in some countries where there is a problem, you couldn't argue that immigration is just to, grab from the welfare state. And I think that's a sensible policy again. I mean, look, running a government is common bloody sense, isn't it? Isn't it common sense? And I really wonder why there's so much stupidity in government decisions, especially nowadays, that gets us in the mess that we're in.
Don't we all get the politicians we deserve? I think Socrates said that a long time ago. So no, it's actually beautiful. It brings me right into our absurdity of the week. I have another headline of the BBC. We've just established what Milei is and what he isn't. And they called him Argentina's far-right outsider wins presidential election. So I don't know who writes their articles at the BBC, but apparently nobody who ever had a textbook in their bloody hands. And if you read all this narrative, so if you are a far-right populist, that's bad. So what's the opposite of a far-right populist? A far-left elitist, right? So that is what we're all looking for. We want more far-left elitists to really improve the show we have. So that's why I thought, no, you definitely get the absurdity of the week. If you can't just run around and call everybody a Nazi, yeah? Especially if the guy is a real libertarian and wants to, well, fix his country. It's not far right. We just went through the policies. He's actually very liberal-minded in the economy, on social benefits, and he might have a real chance to change everything. And that's where my conspiracy hat goes on again. Nick, they can't allow him to do that, can they? Whoever they are.
Yeah, whoever they are, but actually they might have to go down the same route eventually. Because these are, a lot of what he is talking about is very sensible, common sense policies. And I think, the West would be very happy if they had an Argentina that worked. The BRICS would be very happy if they had an Argentina that worked. So the Argentinians would be happy if they had an Argentina that worked. It kind of solves one of the zillion problems the world has got today.
Yeah, well, look into the history books. Argentina used to be richer than Germany before the First World War.
Absolutely. Argentina was, used to lend money to European countries. It was truly a wealthy country, and they got into a rough patch, and they continued down a very slippery slope to get to the situation they're in now. And it was, policies of just continual spending and buying votes that ultimately took the country down. Let that be a lesson to all of these other politicians that we know about.
Well, they never learned. There was a saying in Germany, it's not being used now anymore, but in my little courses through history books, German saying, rich like an Argentinian. That really was a phrase we used in Germany.
There you go.
Yeah. Well, anyway, so we've gone through the politics and navigated that minefield quite reasonably. And then I thought, let's have a brief look at the economy. A couple of quite interesting slides I came across then and now. And as it is Thanksgiving, happy Thanksgiving to everybody who's listening to us from the United States. It's over now, but I thought this is a very good chart. It shows 1001 days in the life of a Thanksgiving turkey, how much you should trust economics. So it's a steady improve until the last day when you realize, oh, the data is not in my favor.
So it looks like a chart from Twitter when it's talking about the market from some of these guys to say, oh, look, the situation where we are now.
Could also be WeWork, or could be what's the guys with his electric bicycles who
Sinclair, wasn't it Sinclair? No, that wasn't.
No. The dudes, it's one of these trades I never made, and I'm still biting myself. They came out with their bicycles for $2,500 or something, and had price knockoffs of $5, and then suddenly they made it half price. And I said to everybody of my students, that is a stock you have to short now, and I didn't do it.
Right. Okay.
Peloton.
Oh, of course. Yeah.
Anyway, so you remember the good old days. Do you see that little green pimple over there? You and I were reasonably young back then, and I remember that when Bill Clinton was president, they were telling us, our floor economists and everybody, sooner you'll run out of treasuries because the United States are making so much surplus. There will be no treasuries in the market anymore to price a risk-free curve. Be aware.
Yes. So look at, this should frighten absolutely everybody, because this chart you're showing is going back 50 years, more than 50 years now. And there looks like two tiny little green bits, but what it does show you is that government is there to spend. And they got the bit between their teeth, and they understand it, and they like it, and they do more of it, and it's more, and this is just getting bigger and bigger, and that's quite frightening, especially we are at times of huge government debt without having recession, and I think that what would it look like if the economy was really struggling? So frightening.
Well, couldn't we employ your positive technique and say, okay, that's the absolute low now. Now it will improve from here on. I like that notion a little bit more, even though I follow you from a logical perspective. Brings us to the consumer inflation expectations climbing. So there's this, we discussed that last week and the week before as well, that according to the revised data, the American consumer has another 400 billion to spend till next year. And I was wondering why the American consumer is spending like a drunken sailor. And my theory was always a bit different. I said, they know they're going to be bankrupt. So you want to have the last party with the money you have before somebody else sends you a bill and takes it all away, before you have declared bankruptcy. And this is actually, the consumers are expecting that inflation stays high, or prices will at least not come down. So my explanation why there is the spending. And then there was another tidbit I read about just before we went on air, that they've now started, the average consumer in the United States, reacting like recession buying. So they're not buying their winter coats at the moment. They're only buying them when it's getting really cold. Stuff you do in a real recession when you're running out of money. If we take this fast forward and assuming that their money will run out soon, then we are in the real pickle in the United States, right?
Sure, but because as we talked about, I think the analysis showed that the consumer has something like 400 billion left of the 2 trillion I think it had during the COVID times. Although I must say there are some measurements of this which make it much larger than 400 billion. But let's assume It's around 400 billion. That is running out. And so by the end of Q1 next year, let's assume that money is gone. Well, where do they get the next bit from? And there are some dark clouds over the horizon. But for now, things are okay. But it's not just the consumer we need to worry about. And we talked about it again last week, is that the unemployment level is going through this sort of Jeff Gundlach moving average thing. The unemployment rate has now started to spike upwards. And if that also does continue down that path, then, it kind of makes sense what's happening with the yield curve in the States, not just the yield curve control from Janet Yellen. We talked about that many times, issuing of T-bills only. But, perhaps people are sort of rightly putting forward some kind of slower down scenario, not necessarily recession, but slow down in the States for next year. And what that does is that kind of puts a peak on interest rates and, gives the risk markets a little bit of a boost, gets the Fed a little bit more sort of friendly towards the markets. It could be good for risk assets.
I have a nice slide coming into that. This is first the leading indicators. I
knew you were going to show me that.
Of course, I always have to put the leading indicators on.
Since we began. I think it was the first thing, our first sort of thing.
Yeah, because first of all, I think we're already in a stealth recession. Yeah, take the Magnificent Seven out. The market hasn't done anything. And you see things are not developing as positive as they should anyway. If we see this and take into consideration what you just said, that we could be in for a rough ride. I came across this slide, i3 Invest, something on LinkedIn that came across. And he simply pointed what is happening when T-bills actually, against the moving average here, start falling. Then we're getting into the bear market, which is this, the market now is pricing in, oh yeah, we've seen the peak. Interest rates will come down. Yeah, the seventh time or the sixth time, or how many times we've priced that in. And every time that happened, we actually were really entering a horrible bear market. And then our friends from Mako Hive had a fantastic slide in here, which I think is the slide of the day we have in here. It simply shows US bond yields tend to fall after the last hike. Then you have the 10 years, and at the bottom scale, you see the days in line. And the orange line actually tells you what they've really done in this cycle. And on the other side, you have the 2 years bond treasuries, what they have done in this cycle. And even if you're completely blind, what you can see here, something has to happen big. And this only happens, at least in my view, if we see a major recession and the Fed has to take it down.
Well, again, coming back to recession, we already said from the very beginning of today's chat that the governments can't afford recession, and they will, by hook or by crook, they will do whatever they can. And it's an interesting slide. It's something similar I showed to a client a couple of weeks back, comparing this cycle with the cycle between 2015 and 2019. And what happened then was, we're in a pretty, not really the similar situation, but not so dissimilar, is that in December 2018, so as we're coming up to December now, the Fed made their last rate hike in December, I think 20th of 2018. The stock market didn't like that at all and was continuing its bear trend, and fell, Christmas Eve, I think the market, was the final collapse. Then on Boxing Day, things started to rally again. And what happened just a few weeks later, literally just a few weeks after they've raised their last interest rates, is that, and by that stage, by the way, the treasuries were rallying again, as was the stock market. The Fed announced in January of 2019, just a few weeks later, in an FOMC meeting, they said, oh, by the way, we're going to pause. The market already realized that. And at that point, that decision, that clarity from the Fed that they were in pause was, again, kickstarted the rally in both treasuries and equities that saw prices for both of these instruments rally to, really a spectacular rally in these markets. So, we may well be in such a situation, because if you remember what my kind of thesis is here, is that, we talked about it when yields got to 5%. We said, well, Actually, you've got no downside if you buy treasuries, because yields go up by 50 basis points, don't lose any money. Yields go down by 50 basis points, you're going to make money. So you've got this asymmetrical payoff in bonds. And then you've got the yield curve control happening by Janet Yellen, which effectively just shifts all of the issuance in the short end of the market, if effectively keeping rates and this sort of pressure on the long end at bay. You had already the start in the rally. And I think very soon, the central bank will be admitting to the sort of clouds on the horizon. The ECB have already started to say that. I mean, rightly so, because the European economy is in a mess. The US economy, there are some signs that things are not looking good for the economy. And inflation or not inflation, we've had some pretty good numbers. You're on a good path. When the economy starts to top out, there's no reason for the Fed to be on that gas pedal anymore. And that's when you start to see things take off. But you do need support from the short end. The short end is still a little bit too high in yield to get the long end yields much lower, in my view.
I'm looking at this chart and I'm wondering, gravity would indicate, yes, that rates have to come down and have to come down quite dramatically. So if gravity is the pulling part, what is the black matter that keeps it all together? And we spoke about that also, about the Treasury debt spiral. If we see a recession, tax income will go down dramatically. How on earth are you going to finance your state if the Chinese and the Japanese and the Europeans are not buying your treasuries anymore? You have to start printing money again, right? You have to start printing money like crazy. And you're not interfering, yield curve control, as you always propagate, which will come in inevitably. That could be an explanation why rates haven't come down yet, because the market is fearful of, is frightening that this actually could happen. We'll see a recession, but the state has to finance itself and it has to print and print and print and print. And that will keep interest rates at these elevated levels where they actually shouldn't be.
The yield curve control is two types, right? One is the Treasury doing what it's doing today. You can see from all of the quarterly refunding announcements from the Treasury, they are pushing all of their borrowing in the short end of the market. They're doing the minimal amount they really need to do at the long end. And that should provide some kind of supply concern, if you like, for the short term, at least on the long end of the market. But if the long end of the market does continue to rally, because as you rightly say, from episode one, they have to borrow. Who's going to buy it? We know that foreign buying is growing at the rate of about 2.5% a year. We know that the Treasury borrowing requirements are growing at the rate of about 6, 7, 8% per year. So the gap has to be funded domestically. So if you're going to take the money from domestic investors, these guys want more interest rates. They want bigger returns because they can go and put their money in equities. So they say, well, if you want me to go and buy your bonds, you have to pay them 5 or 6 or 7. That's when the other type of yield curve control takes over, where effectively the government say, all right, enough's enough. We ain't paying more than 5, right? That's it. And they'll sort of phone up Jay and say, Jay, 5%. That's it.
So that
cap the long end.
That could be the scenario. Mr. Trump wins the next election, is forcing the guys to lower interest rates, no matter what the inflation is. That's when you have to load up on gold and commodities till kingdom comes, right?
Yeah, so again, I apart from all of this other stuff that I do, cycles is a very important thing. And, for me, Bitcoin, which I follow, the cycle in Bitcoin is still very positive, right up to at least 2025. And for that reason, you can expect that on the other side of that trade is, the dollar. The other side of that trade is, stuff that isn't going to do well when you are debasing your currency. So, basically,
I really don't like you Bitcoin boys, because I'm pretty sure if you guys haven't been in the market,
if I said gold, would that make you happy?
Gold would already be at $3,000 or $4,000.
The reason I say Bitcoin is like saying silver versus gold. So silver has got a higher beta to gold, and Bitcoin has got a higher beta to got a higher beta than gold. So that's basically that's how I see it, and that's why I say Bitcoin, because it's the extreme. But I can accept just being long of gold as the kind of the saving grace in all of this mess.
By the way, the mess is getting worse. I'm doing a shameless plug now for our very own Murat, who published a nice article on LinkedIn about the VIX. And to make the setup, we have the Fear and Greed Index. We are now in greedy territory again. Yeah, not extreme greed at the moment, but I think the market is now talking about the rally. We started talking about it a bit earlier, before the rally actually happened, but now it happened. And Murat, as he is an educated man, he actually called it, if you want peace, prepare for war. And he only put the subline, si vis pacem para bellum, underneath, which I would have put shamelessly in the headline because so much nicer to put that in. We see a chart of the VIX here in front of us, and the VIX has completely collapsed. 1245 here on this chart, around that level we are at the moment. It's not that we can't go even lower or stay at that level for a while, but, well, we are discussing that for weeks now. It gives peace of mind at this level, actually, to pull in some hedges, especially of all the other things. It's now just, for me, it's just a question of timing when the market is going to fold. If it's doing that from a higher level, I can't tell you. It will fold sooner or later. If I get cheap volatility, I'm going to build up a hedge. And for the last couple of months, we actually did it quite nicely. Every time we were around this level, we went long. And when we reached the level of around 20, we sold it again. So what would I do now? I would actually, at these levels, always get a little bit volatility into my hands, yeah, because the carry is killing you slowly. It's not going to be as a nasty surprise. I would not short volatility, as so many seem to do at levels above 20. In this case, and just you sit on the sideline, don't do anything. But we've reached levels again, especially with this economic, the macroeconomic environment we have, with the leading indicators, with the political situation all over Europe or all over the world. I think it's complete insanity to have VIX levels at around 12-ish. Here, and I can just recommend, go on LinkedIn, find Murat, look at his article. He's actually described the mindset quite nicely, and I thought I have to give that a plug because it's an opinion I'm very strongly firm with. However, the only caveat I have, it's on our website. I made a study a couple of years ago. As long as we are below 20, you can actually be blindly, if you play it the long term, blindly be long equities.
Sure, indeed. I remember the work that you did many years ago on this thing. Yeah. And that's right. But I mean, coming back just very quickly to this thing, you know, the low that we formed above 4,100, the turnaround in the yields of 5% in treasuries, the borrowing path of the US in T-bills versus long-dated coupons, was for me enough of a signal to say, okay, I think you're okay to be long. And, you know, I actually see next year still very good. So, you know, I don't think it matters what you buy. I think you should be able to get a decent return. I still don't believe in market collapse. I think the economy weakens, but remember, the economy and the asset markets aren't always the same thing.
Yep. I agree. So we got that out of the way. So I shall leave you now with Mr. Habeck and Mr. Scholz to advise them on how to fix the shenanigans they came up with. Tell them also to reduce my taxes. I don't like that. And yeah, otherwise, Nic, thank you very much. Any last words?
Enjoy your week.
I shall enjoy my week. I quickly stop the sharing so that we have ourselves full screen on again. Have a good time in Berlin, and we shall see you again next Sunday. Thank you very much. Bye-bye.
Bye-bye.